What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 26th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about why not only through price action, but data science, we're clearly seeing that we're stepping into the next Bitcoin cycle, and I want to talk about some key lessons and takeaways that we have to keep in mind when we analyze these data science models, as well as the core price action of Bitcoin. So we've got a lot of things to discuss in today's video, right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone, so to start off, let's go ahead and start simply with price action. Whether you're taking a look at the short-term time frame, where we've had a clear weekly breakout above the line of resistance, the first time we've actually gotten a close above this line all the way back since the line of resistance started back in December of 2017. So this is a massive moment for Bitcoin. We've also seen kind of a curving in the volume here, the SMS indicator flipping up to the bullish side. So here on the weekly time frame, much longer time frame than most people are focusing on when they're looking at the charts, even on the weekly time frame, we're flipping on a bullish pattern here. So this is good to see. But outside of that as well, just taking a step back, looking at the monthly chart, right? The really long-term chart here, we can see each of these candles representing a month here. What we can see is that we're again formulating the beginning stages of the next trend that has started all the way back here since the late part of 2018, going into 2019. The important thing to take away from this, though, as we take a look through price action and data science models, is that there's a lot of lessons to be had when it comes to what the market tells us in this sense and how Bitcoin operates. So the first one here, as you can probably see, is something that I've talked about before on the channel. But for those of you who are just getting back into crypto, maybe don't watch every single one of my videos, it's no worries. I recommend you hit the bell icon and subscribe, but I think after this video, you might be convinced of actually doing so. So I want to talk a little bit about expanding cycles. Most people, when they're looking at Bitcoin, they're looking at the dramatic $200 or $300 moves that Bitcoin's going to make within a couple of hours, or maybe a 48 or 72 hour period. And quite frankly, I don't really care about that, because for myself, I'm not trading during that time period. I'm trading over multiple years. I'm trying to ride each of these kind of waves and be able to generally get an idea of when that top is going to be as a trader, because I don't want to have to deal with the stress of the day-to-day. And along with that, statistically speaking, I have less likelihood of outpacing the profit that I would make just generally trying to pick bottoms for the cycles and riding the wave over about 2.5 years, or at least that's how long it had taken in previous cycles. See, with expanding cycles, we need to understand that there's a big misconception with Bitcoin, and that's that people believe that it's a 4-year cycle that Bitcoin rides through. And quite frankly, that couldn't be further from the truth. In fact, we have what's known as expanding cycles. We've really had, so far, 3 full cycles for Bitcoin. We had an 11-week cycle back here from when we started to get actionable price data and actionable volume as the first major exchanges started to list Bitcoin back in 2010. The second one here was in October of 2011, going all the way here towards a close around November of 2013. And you can see here with each of these cycles, as we stepped into the third one, which led to 20K Bitcoin, notice how we're looking at the monthly chart here, right? We can see that this cycle was 11 months. This one was 24 months. This one was 35 months. What's the general trend we're seeing here? Well, each time we're adding around 11 to 13 months, give or take basically a year for each cycle. So it would make logical sense here that for this next cycle, we would add another 12 months, give or take. Again, it could be 1 month less, 1 month more. And that's going to lead us here towards somewhere around November of 2022. And if we take a look at the logarithmic chart where we have the line of resistance that's curving over time, it's roughly around a big even of 100K. So this is the general price range we're looking for here. Again, just to give you guys my kind of target frame for price as well as the time frame for it. It's very important to know how long it could take to get there. Now this is just taking a look at the short-term price, giving us the confirmation that we're breaking above the line of resistance and the expanding cycles. But there's also some interesting data science to keep in mind. So when we take a look at the stock to flow model, this is one that a lot of people talk about in regards to the crypto community and what makes Bitcoin so unique, as Bitcoin is constantly reducing its supply schedule or the issuance of new Bitcoin every 10 minutes through the halving event. We just had the halving event happen back here in May of 2020. And again, now you don't have people really talking about it. Again, the stock to flow, it's not that it lost its, it didn't lose its relevancy by any degree, but at the same time, people stop focusing on it. They kind of wait for the halving event, and then they see it as almost a non-event because nothing happens immediately. But if we take a look here at history, as we look at the previous halving events, we can actually see that we get more and more of a delayed response here in regards to the halving cycle. For example, we can see back here that we had a couple of months until we really started to catch up. In fact, not until the later part of the cycle, not until November of 2017, 1 month from the top, did we finally get above this red line here, the fair value of Bitcoin according to the stock to flow model. So a lot of people were expecting that as we got here to the halving event that we were just going to go to 20K, revisiting all-time highs, 40K, 60K, 80K, 100K, and that's not the case. It takes time. So as we go again across the horizontal axis here, or the x-axis of the chart, we again are going to see that it's going to take longer and longer with these expanding cycles to get back up to fair value. And that's why I've proposed here, not only through the price action, but also through these models, that it's going to be sometime way later in the cycle, right? As we start to plateau here, sometime into the later part of 2022, almost stepping into 2023, when we'll actually get above this. And we're going to start to diverge a bit from the stock to flow model. So this is very important to keep in mind here. But all in all, we're exactly where we should be. We're at fair value, basically speaking, just slightly below it here. So it means that we've got some good room to catch up in the long run. The second thing I want to talk about here is the HODL waves. And I want to specifically hone in on the 1-year HODL waves. Many of you probably have seen this rainbow chart where we talk about the Bitcoin UTXO, or unspent transaction output distribution. And it showcases when basically an unspent transaction or an amount of Bitcoin that has been sent to an address has basically not been spent. Okay? So it has been moved, simply put, right? So we have these HODL waves continuously expanding on the longer term time frames, but one that's just very important to keep in mind here is a fair focus on the 1-year HODL waves. So this means the amount of Bitcoin that have not moved for a year or more. Right? Very simple way to just measure, whether or not people are generally holding more Bitcoin or are generally, moving more Bitcoin or spending it, possibly even selling it. And this is a very interesting chart here. We can see that over time, though there are these different cycles where it goes in and out, higher and lower, we can see that generally speaking, the higher levels reach over a longer period of time. So the more and more history, we basically have for Bitcoin, the longer the time frame, we basically get to a point where we have higher levels in the HODL wave. And in fact, here in July of 2020, going into August, we are setting the highest level for the HODL waves in history for the 1-year HODL wave or more. So this is really, really important to keep in mind here. We've gone well beyond the amount of Bitcoin being held. What was back here in January of 2016, we're now resting around 62% from the previous high at 61%. And it looks like the trend is picking up pace quite steadily. So I'm expecting in this cycle that we're probably going to be going towards the upper 60% range, maybe even dabble around 70%. Who knows? We'll see what happens. But as we get more and more people, for example, players like GBTC, through Grayscale and a lot of other different institutional on-ramps starting to get a hold of Bitcoin, it's starting to get to the point where there's not much Bitcoin liquidity available on the market comparative to what it was back here during, for example, the peak of the altcoin cycle where people were selling their Bitcoin, moving it around, going to different exchanges to buy altcoins. You can see we've gone from a big difference of 42% all the way up to 62%. Right? Almost a 50% increase in the amount of Bitcoin that's not been moved in the last year. That's very, very important to understand in regards to the supply and demand dynamics of Bitcoin. Speaking to the supply side dynamics of Bitcoin as well, we also want to keep in mind the daily coin issuance. This is what's known as the POI Multiple. Now, to put this very simply, what this chart determines here, it's the red line here that we want to focus on. The red line here determines the daily coin issuance, so the dollar amount of Bitcoin being issued, divided by a 365-day moving average in this case. So an average over the last 365 days, generally seeing whether or not we are seeing a massive level of new issuance of Bitcoin on the market that's flooding the market with new supply versus what we saw, over the last 365 days on average. Very, very simple data science model here, but it provides a lot of value. We can see that we had a sharp drop in the POI multiple here because of the halving event. So again, just to focus in here real quick, you can see that it's going to have these very stark declines here when we have halving event models. And this basically gives us room where, again, the demand can start to pick up, the supply is gutted, and it provides this awesome cyclical process for Bitcoin to really start picking up. But the reason why the POI multiple is probably one of my favorite data science models is it's probably one of the most relevant in the sense of predicting tops. So I'll go, for example, you can see this blue line up here as well as the POI multiple, and this is Bitcoin's price here. So notice how when we entered into this red zone here for the POI multiple, we were actually just 1 month away from the top here. We started to enter into this range here around the 29th of November of 2017, and the peak was on December 17th of 2017. So again, very accurate at calling the top here, or letting us know when we're roughly reaching that top. Another example here, POI multiple entered in to the red zone in November 11th of 2013, and then topped out just a couple of weeks later in regards to Bitcoin's price and also the POI multiple. And again, last one here, another cycle top here, entered into the POI multiple here back in March 20th of 2013, peaked out April 9th of 2013, where Bitcoin's price actually peaked. So again, very relevant data science models to keep an eye on, guys. And this all kind of plays, and I think the POI multiple, as well as the HODL waves, and also the stock to flow model, all focus on something that makes Bitcoin stand out. And that is its interesting, unique, and special supply and demand economics that play into the asset, unlike any other kind of commodity or stock or other asset class. When you have a reduction in the available supply of Bitcoin due to the halving event, as well as a pickup in demand as price continues to reach higher levels and as more people start to hold on to Bitcoin, you get these very, very powerful cycles where you have massive multiples on Bitcoin's price. And it's why we have to focus on these longer term time frames. An additional point to keep in mind for all of you who are Bitcoin investors, I'd say to not negate altcoins. During these cycles, there are going to be many altcoins that, whereas Bitcoin, from its bottom here back in January 2019 to its eventual probable top at the end of 2022, even though it's going to probably do near a 30x here, focus on a lot of the different altcoins. Keep in mind that there are other plays out there in the market that may be worth your attention. So if you guys want to keep up with those different plays, as well as analyzing Bitcoin and the changing trends that happen over time, make sure to definitely consider subscribing to the channel. Drop a like if you enjoyed this video, and make sure to hit the bell icon if you don't want to miss any other videos. But I want to hear, most importantly, what you all think. What do you think about what's going on in the market right now? Leave a comment down below. I'd love to hear from you guys and get a discussion going. But that all being realized, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.